Good morning. Good morning, everybody. Good to see a few of the early birds there. James, Allison, good to see you. Good morning, crew. Good morning, team. Hope you're all well wherever you are. Hope you had I think it was Queensland. Who else had a long weekend? Queensland had a long weekend. It's been the month of long weekends here in QLD. There's Jeff. Morning, Deb. Morning, Simon. Good to see you guys. Hey, welcome. Thanks for joining me today. Good morning for another Wealth Coffee chat. Been doing this for a while. You guys been hanging out. If anyone's new, say hello. Jason Witten's my name. If you didn't already know, there's Trace, Kieran. Good morning. Let's see. I think the microphone's working today. Melinda, g'day. If you're new, let us know where you're dialing in from and what you're up to. Welcome. Jason Witten's my name. As I said before, been coaching property investors across Australia and New Zealand over 18 years, investing over 20 plus years, 22 years actually, myself, along the way. Paid attention, done a few deals, over 100 deals myself personally, and over 7,000 deals with our team, helping customers buy properties, try and keep them for as long as they can. Along the way, we learned a few things, and each morning, like to share that. Hey, Melinda, thanks for the shout out. Hello from Melbourne. Hopefully it's good down there. It's been lovely weather here on the weekend. Hopefully you're all good. Hey, there's a lot of talk about interest rates, isn't there? Jeff, might be interest rates today. Who knows, Jeff? Who knows? We don't know what's going on, do we? And but one thing I wanted to touch on today is that there's often a little bit of misunderstanding about interest rates and things called cash rates. Hey, Luke, good morning to you, mate. Adrian, all the way from Noosa. Hey, Luke, I'm coming to Noosa on the weekend. Might run into you. You never know. Well, near Noosa anyway. Yeah, tell me, team, is the cash rate, which is what the RBA is talking about, putting up, is that the same as interest rates? Tell me, what do you guys think? What do you guys know in the chat? Because I see a bit of confusion about this out in the marketplace, and fair enough. We're not taught this stuff at school. We're like, what? Fucking different things like cash rate, interest rate, newspapers and the media talk about it badly. They report inaccurately. It drives me bloody insane, But tell me, like, is the cash rate, which is what the RBA is talking about putting up, the same as interest rates? If you're not already typing it in there, the answer is no, they're not the bloody same, team. All right? Cash rate is different, completely different, all right, to interest rate. And let's have a bit of a look at this. Cash rate, it's what the RBA sets a certain number on. And our cash rate in Australia is it's at 0.01%. It's 2/5 of bugger all, right? It's nothing. Cash rate compared to interest rates is completely different. And tonight at my mentoring program, I'm going to dive deep into this stuff. I'll tell you guys a bit about that later on. But the Australian cash rate, lowest in history, and that's the same a lot around the world. What governments do is they reduce the cash rate of a country, and that stimulates activity, often because money that was sitting in places earning a certain amount now has to go to work because it's stuck not working at 0.01%, okay? Interest rates, on the other hand, team, are what the banks charge you for a loan. Now, at the end of the day, what happens? How do we end up with, let's say, this at 0.0%? and you're getting a 2% home loan, okay, what happens is the banks buy money at the cash rate or get given it sometimes pretty well for free from the government. Wouldn't that be nice? Why don't they give us some money at 0.01%? You know, don't get me started on this. And then the institutions lend it to you and they make a margin. It's usually about a 2% margin, folks. It's about 2%. They buy money at sort of zero, basically, and they're lending it to you at 2%. Or thereabouts, you know, a version of that. Now, that's not vast and accurate for every single thing. However, folks, that's kind of how it works. Now, and if the cash rate, if the RBA put the cash rate up, then what happens is the banks and the lenders pass on the cost of that cash rate increase because the cost of their goods now has gone up. Now they pass it on to you in the form of an interest rate rise. Now, interestingly, the cheeky banks have already started doing that, folks. Yeah, and everyone's just sitting around with bated breath. Oh, interest rates might go up. Folks, unless you've been living under a rock and you haven't been paying attention, which might be true. It might be true. Let me do this. Here's a few of my slides. Already, team, these interest rates have been going up. Already gone up since November, December last year. They've already gone up. It's already been priced in. And the talk around town at some point over the next 3 years, a cash rate increase from literally nothing at the moment to about 2% is the talk around town. Now, how's that going to flow into your world? How's that going to flow into us and mortgages? Now, tonight, just so you guys know, I'll quickly show you. Tonight, I'm going to be going through all of this stuff. You can see it here. I'm going to dive in deep into this. I've got 60 bits of presentation slides tonight to talk about at mentoring, our coaching and mentoring program. I call it the fear and fact conversation around what's factual in the market and what's absolute fear and bullshit. So, you know, yeah, Jay, it's a theory, my friend. But at the end of the day, whenever you buy the money, then there's a cost added onto it. You can make up your own calculation, but understand the conversation is this. Whatever the number is, at the moment it's pretty well free. The banks are getting money and then they're lending it on to you for a margin. And that's how business works, team. That's how business works. Nothing wrong with that. We need to make sure we manage that as investors and understand what the costs are. All right? So let's have a bit of a chat about that. Like I said, for all of those who are in our coaching and mentoring program, tonight I'm going to dive deep into this. I've got 6 things I'm going to dive into tonight to really show a little bit of the information that's out there rather than the fear and stupidity that's going on with the mainstream media, all right? But what does it look like when this flows into our world, your world, my world, when it comes to interest rates? So that's really the gist of it, folks. Let's be serious. Oh, let's go over here. I need to change that. Doubling up on the view there. What does it look like when that flows through into interest rates? Absolutely, Brendan. Yeah, mate, lock in your buffers. Make sure you got that there. But tell me right now. Hey, good morning, Sonia. Good to see you. Stephen. Kylie Hardick. Good morning, mate. Jay. I think there was a Dan and Luke. Laura. Adrian, good morning to you guys. Hey, so tell me right now, is it true I saw this the other day in the bloody Fin Review. That's just ludicrous. If the cash rate goes up, then that gets passed on through your interest rate at whatever point, some point into the future. Will that now double your mortgage payment? If the interest rate goes from 2% to 4%, is that going to double your mortgage payment? Tell me right now in the chat. Is that what's going to happen? Morning, Margaret. Because team, it's rubbish to some point indeed. Listen, folks, it's not going to double your payment. No, of course not. It's not going to double your payment, team. And Hardik, this is why we've got to keep managing to keep our minds in place, because there are some people out there that you can absolutely balance it with your increases in your rent, Hardik. It's coming, folks. It's coming. I'm diving deep into the rent boom tonight as well. So don't miss it tonight, you lot. Make sure you get there, right? So I've seen such misinformation in the past little bit, and it's going to continue. The media loves clickbait and fear and ignorance. It's just it feeds on it, and unfortunately, some of us get caught up in it. It's not going to double your payment. Okay, so let's check this out. Have a look right here, right now. You can see on the screen. You can see the outstanding. So a $600,000 mortgage. You can see at the top there. And I've got my little clicker here. You can see it live. $600,000 mortgage, $600,000 house, a $500,000 mortgage, owner-occupier, 30-year loan, 2% interest, monthly payment, which you shouldn't, but that's just how it rolls, and then a principal interest payment. Like literally the worst way to structure a loan, but let's just do the worst, okay? Now, have a look down here. Okay, this is the commitment you've signed up to at this. And if you, that's true actually, Hardik. Yeah, if you're doing interest only, it's a different kettle of fish, isn't it? You're dead right. So, your outstanding, and then your principal, and then your interest. Okay, so if you have a look at that, there's your payment. $1,849. Now let's put that to 4%. Let's put that to 4%, and let's have a look what happens. Now, did that double the payment? Let's go back and have a look at this now. Let's go and chuck 2% in there. Not 42. That'd be pretty gnarly. 2%. It didn't double the payment. It went up $500. Right. So the interest goes up. And like Hardik said, the interest is the part that you're paying, not the principal. So the talk about everyone's going to have to sell their homes, and mortgage owners and stuff, principal homeowners, are going to be, in trouble, all that sort of stuff is quite frankly a bunch of bull. And I'm going to tell everyone tonight why that is, because, the banks didn't come down the last shower, did they? And we actually have a pretty safe, if not very frustrating, banking system in Australia. And the idea, team, is that there's talk about the property market exploding and people selling, and, everyone's got the market's going to implode. What a bunch of rubbish. Will property prices reduce? I think so. I think some people have paid more than they should for real estate. That happens. Is that normal? Yes, it's bloody normal. Every single cycle I've been through, there's a frenzy. People pay more than they should for rubbish property. And it's the rubbish property that gets affected and flogged. And then things settle down for a bit, and then it kicks on. But as a property investor, what we're going to get is this massive rental boom that then accelerates us to the next stage. So, team, it's an 8 to 12 year cycle, Hardik. depending on, where and what marketplaces you're in. But it's usually sort of an 8 to 12-year cycle when it comes to expansion, bit of contraction, okay? But will the market implode and property prices fall and, you should wait a few years and you'll get it cheaper? No, complete rubbish. Rubbish. Because the good stuff that you should be buying, not rubbish, you might buy some crap, the good stuff will stay at the right price. People who own good stuff won't sell it if they understand where they're going. And certainly, I'll talk about why I believe the market is going to be severely undersupplied for the next 5 years, if not another 10. Team, we have got so much stuff. We got problems with our economy. Even though the politicians are talking it up a little bit at the moment, I can tell you right now that the interest rates going up won't be a problem. Matter of fact, it's going to be good for the country. It's going to be good for the real estate marketplace to chill it out a little bit, because we need some certainty in some pricing for our supply chain to get going. And our supply chain is broken. We're at the lowest, like the worst supply we've ever seen, and we've got a population boom coming. Folks, there's so much on the radar. So much on the radar that is coming as you go. So listen, I'm going to call it short today. I've got to rush off to another little meeting that I couldn't get out of, but I just wanted to touch base. If you're on a principal interest payment, your payment's not doubling, okay? That's ludicrous. If you're interest only, you will have a high payment already, folks. Like an interest-only payment right now. Tell me in the chat what your interest rate is, because my interest-only payment's already at 4.5%, folks. It's not going up much further. It's the other rates that are going to be affected as we go along. And but watch this space. Make sure you come to mentoring tonight, you lot. We're going to dive deep into it. And probably over the next few days, I'm going to, reiterate and dive into that as you go. There you go, 3.49%. Brenda, it's already up there, nearly 4% anyway. So it's interesting. Don't be caught in the fear and the stupidity that the media likes to get going and the clickbait. And make sure you check in on things. Markets aren't one-dimensional, folks. They're not one-dimensional. They're not just one thing. It's not one thing. Oh, interest rates go up, houses go down. Rubbish. Matter of fact, 8 out of the 9 other times in the recent history that interest rates have gone up, house prices have gone up with them. Check that out. There you go. But there are other things afoot, and I'm going to talk about the 6 big drivers tonight, team. 6 big drivers that affect the real estate market consistently, and you got to know what's going on with each of them. Anyway, that's it. I got to go. You guys be good, be well. Join me tomorrow around about 8:10. Started early today for another chat. And if you're coming to mentoring tonight, make sure you get there. Or be square. You'll miss out. All right, team. That's it. I'm just rabbiting on now. You guys be well. Have a good one.